What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is June 17th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we've got to start off by taking a look at the craziness that's been going on in the DeFi space over the last 48 hours as the Compound Protocol token, or COMP, has finally launched to the market, becoming the most valuable digital asset in the DeFi space. We're going to be talking about that and why this craze has been going on and some of the other symptoms that have been left behind because of it. And outside of that, take a look at a few other different resources as well as visiting precious metals. So we've got lots of things to discuss. Let's go ahead and dive right into it right after our quick sponsor. Our sponsor for today's episode is Ledn.io. For those of you holding Bitcoin and digital assets long-term like myself, why not put it to work? Ledn works with Genesis, the most established institution in digital assets, to give its retail clients access to a suite of institutional-grade services to manage their digital wealth. Their savings accounts let you earn the best risk-adjusted rates on your digital assets at 7.5% on your USDC and 4.1% on your Bitcoin. Their B2X loan service lets you double the amount of Bitcoin you own through a Bitcoin-backed loan. And you can also access cash in a tax-efficient manner through their Bitcoin-backed loans while keeping your Bitcoin under insured custody with BitGo and real-time proof of reserves. Get a 250,000 Satoshi bonus if you register with the link below and get a loan today. Alrighty, everyone, so let's go ahead and take a quick look across the board for the market. The vast majority of cryptocurrencies in a no trend scenario, as Bitcoin has continued to push relatively sideways. However, we do have some outliers here. Swissborg, yet again, up in double-digit territory, going exponential. We've got a few other plays that are familiar for us. NANO, Ravencoin, and even Unibri as well, doing well, and Nexo, and Komodo, and Steam. So it's good to see this. A lot of solid plays across the board here, doing well, entering close to double-digit territory. Take a look at Bitcoin. Nothing too severe here. We're still continuing to set in these higher lows, continuing to ride along the line of support here. Again, so long as we see this and we see a continuation on the breakout, that's going to get me confident. But again, volume's relatively stagnant. This is probably the biggest worry that I have right now. Now, I want to go ahead and just dive straight into this interesting topic, guys. Markets haven't moved too much today, and I don't want to waste your guys' time. I want to talk about something really interesting, something that really shows, again, the excitement around DeFi. Yes, as well, a bit of speculation around it as well. But also, again, I think the importance and excitement around the idea of governance tokens and these DeFi protocols that are really going to help scale out, I think, a lot of these protocols in the long term. So as many of you might know, and for those of you who may not know, it's no worries, the Compound Protocol is a protocol on Ethereum, or a tool on Ethereum, that allows you to basically lock up some of your crypto, earn interest, and along with that as well, on the other end, if you're in need of capital or credit in a degree, then you can actually take out a loan of digital assets by locking up crypto collateral in this case. So let's say, for example, that I've got a good amount of ETH that I basically, just have sitting on the sidelines, and I need to take a dollar loan out. Well, what I can do is I can go to Compound, and I can actually lock up my Ethereum, right? It's a smart contract in the Ethereum blockchain. That's the cool thing about it. There's little to no human interaction here in this case. You're basically interacting with the contract. So basically, you're submitting your Ethereum to the contract where it's being held as collateral. It's locked up there. And what you're doing is you're getting basically a loan in the form of maybe USDC, DAI, maybe, for example, Tether, whatever it may be. And then you're actually able to go out and use it maybe to take on a margin trade, so you can use it to go buy more crypto and increase your risk profile. Or you could, for example, use it to have credit in the short term. However you want to do it, really. It doesn't really matter. But that's the cool thing about Compound. It's a decentralized lending pool. And the thing is that Compound just finally launched a token it's been hinting and talking about since back in February of this year. And that is the COMP token, COMP. And on the first day, it is top the ranks for DeFi. It is the largest asset in the DeFi space when it comes to tokens tied to any specific project, governance tokens, whatever kind of category you're looking for. In the first day of trading, its market cap here has shot up all the way to $740 million and is currently 35% greater than Maker's current market cap of $547 million. Now, the data is kind of sparse here, guys. Things are changing quite rapidly, and we don't know. Again, it might have actually dropped a little bit below this, but we can see here, at least according to what's going on here on DeFi market cap, the most recent figure is that market cap of $753 million. And we're seeing a current price of each token around $75.35, and the total supply being 10 million comp that will exist. Now, again, bear in mind, that's the total supply, right? It's not the existing total supply, right? So we still have a ways to go before we get to that total cap supply. But again, you can see that a lot of this is starting to drop here. Now, I want to go ahead and, again, we'll dive through this just to give some perspective. Maker, in the sense of assets, is holding much more ETH comparative to Compound. But Compound has been gaining a lot of steam as of recent, and ever since the token launch, they've been able to increase their asset exposure here on the platform basically by double in a matter of 2 to 3 days. So they've doubled the amount of assets under DeFi and the Compound protocol simply from this token launch. Now, again, it's important. I know most people would say look at it in terms of ETH, but the thing is, ETH isn't the only asset that's being added here. There is things like, for example, DAI that's being added. You have as well Bitcoin, and you also, most importantly, have Tether and USDC, which are not being accounted for in regards to these kind of individual viewpoints here on DeFi Pulse. Now, for those of you who are interested in the Compound token, I want to be very clear, guys. There's not really a need to per se FOMO in or anything like that. First off, I would never recommend anyone FOMO into anything. Don't think with emotions. You have to spend some time to understand these assets. And don't feel like you're missing out on anything. Because the valuation is way too high right now, in my opinion, personally. I love the Compound protocol. We have it integrated into the DigiFox wallet. It works great. The thing is, I don't believe it's at this valuation, or at least can justify this valuation just yet. And with most new token launches, you tend to have 40, 50, 60, sometimes 70 or 80% corrections before they really start to kick back up into an uptrend and have a valuable proposition for their market value. So again, I'm going to wait patiently. You can see here as well the volume, even though it's pretty decent for decentralized exchanges. It was processing about $2 million at the peak here, and has now cooled down to a couple 100,000 here over the last few hours. So we're going to be waiting a while, at least in my perspective, until we start to find some value. But I want to go ahead and talk about the interesting symptoms here that this has caused on the market, right? This excitement around the Compound token. It's basically led a lot of investors, as the valuation has been rising high and people want to get exposure to it. People have been looking for unique ways to be able to get access to the Comp token. And this is really a good example of how market incentives can lead to certain symptoms. Now, as I alluded at the beginning of the video, that's what I wanted to talk about. And what we can see here is that there's a mix of different protocols people utilize in the DeFi ecosystem to basically be able, in order to benefit or to try to do certain things. So I'll go ahead and try to explain this. There's a protocol known as Curve within the DeFi space. It's basically a very quick, liquid, decentralized exchange to be able to swap from maybe, say, USDT, so Tether in this case, one of the stablecoins on the market, to another stablecoin like DAI, which is a crypto-collateralized stablecoin, or to USDC, which is Coinbase and Circle's stablecoin. They all basically hold $1 in value, but a lot of people will use it for possibly arbitrage opportunities, maybe to swap into a different stablecoin that they want because maybe there's a market pair where there's an altcoin they want to trade to that's more liquid with that stablecoin. So I don't mean to go way too above and beyond or confuse you guys or just to talk with a lot of technical jargon, but that's what Curve does. It's a pretty interesting simplified protocol, and it does something pretty valuable. Now, however, people found out something very interesting here. There was an incentive for people, in this case, for users on the Compound protocol. And the way that they distribute these comp tokens, they're giving about 80% away to the community through those who utilize the Compound protocol. There was a big incentive for people to borrow certain tokens on the protocol, and basically to encourage demand, in this case, not only to bring collateral, but to bring demand on the borrowing side to increase lending rates for those who borrowed assets that have high borrowing rates, right? So what happened here was a really interesting symptom of the excitement around, not only a symptom of the token structure around Compound's core token comp, but also around Tether here. So I'll go ahead and try to explain it here, okay? So there's a few steps that happen. Because the Compound protocol gives the most comp each day to the markets with the most interest, okay? Right, so the stablecoins are usually where the interest comes in. Right now, among stablecoins, those are USDC and USDT. In other words, users put in USDC, borrow as much USDT as they can, just to take a step back. They're locking up collateral, so they're putting USDC into the smart contract, and therefore, with the dollar amount that it has, they borrow as much USDT as possible. They take that USDT, switch it onto Curve for more USDC, and then put that USDC back in to the Compound protocol, utilizing it as more collateral, and then they go through, take out more additional USDT, and they repeat this process. So what we see here is a bunch of people going through and constantly recollateralizing, taking on basically what would be the equivalent of an excessive margin position to get more comp tokens. And the thing is that they're dollar pairs, right? There's two of these dollar pairs here. So they're basically trying to get as much as they can, and they don't have too much risk because the dollar pairs are going to probably hold their dollar peg for the most part. So this is a really interesting kind of loophole that people found in order to be able to get exposure to more comp tokens, and kind of challenges the game theory mechanics of the comp token itself. We can see here the spike in volume that we had yesterday on the 16th, over nearly $15 million in USDC volume and nearly 17 million in regards to USDT volume. Crazy stuff, guys. And that's not even including DAI. It's not including True USD, BUSD for Binance USD. This is just absolutely incredible. So it's cool to see people experimenting with these systems early on. And you can see that the rates now for Tether are extremely high, right? We can see this huge spike here. And you can see also the total supply here on the contract per day from the 15th to the 16th, nearly doubling, and more than quadrupling here from June 4th to June 15th. So absolutely phenomenal stuff. It's really interesting to see, and I'm interested to see how the price is going to perform here for the compound token. But the major thing here to keep in mind, there's going to be about a little bit under 3,000 comp tokens issued every day for people who are using the protocol. And again, it's for people who are utilizing it and actually borrowing and lending in this case. Now, I wanted to share with you guys real quick just one other resource now that we've kind of dove into that topic. If you guys are looking for a really good newsletter to read up on, or some good resources for the crypto space, I always like to point people towards the right way for learning about interesting things in the crypto space. We've not only got a lot of great resources here on the channel, but also you should check out Blockworks Group. This is put together by Scott Malcolm. And he basically has a good blog here, as well as newsletter that you can check out as well. It's a lot of great free resources that you can look into, but I thought I would just share this with you guys real quick. Now, outside of that, in the sense of the kind of broader market here, in regards to taking a look at commodities, I wanted to talk a bit about commodities as a whole, because I know we don't revisit it that often. Gold and silver, much like equity markets, have still been generally pushing sideways at the moment. I think the world is waiting to see what the Federal Reserve is going to do. It's been a couple of weeks since we've had any severe price action from the markets, simply due to the fact that, QE has started to slow down a bit. Many people are cautious as to whether or not the Fed is going to continue that quantitative easing, or if we're going to see a sense of quantitative tightening, or basically just a freeze on any operations. Well, again, we're keeping an eye here. The major thing here to look for and to realize is that we're in a point of contingent that, again, prices started to push as we take a look back here at the last significant low back here, and also the general high range. We're back in a range that we saw tested multiple times between here in 2011 to 2012. So that's what I'm going to be looking for here. Taking it to the monthly, it becomes even more clear here that I think we're waiting to hear from what's going to happen from the Fed here before we really get that breakout higher. I think silver is a good precursor to showcase to us where we're going next. I think it's that we're going up to much higher levels. I think we'll go up to $21 per ounce for silver, maybe come back down a little bit, eventually break above this line of resistance that's been held in the past and climb higher. And the gold to silver ratio is pointing towards that. We're seeing an exact repeat of what we saw back in 2008. Again, this is a long-term chart here. Take a look at the bottom part here. This really showcases where we are and what we're looking at right now. And we can see here that we had the heightened spike here where gold was the hedge people went to, even though it declined during both recessions. And now we're looking like we're going to be seeing a drop lower here, meaning that we're likely entering into a bull market, a optimistic time period, because as silver starts to gain against gold, or gold starts to lose against silver, this usually means that commodities are moving higher. Silver, being a smaller market cap asset, tends to move quicker and have larger multiples. All right. So anyways, wanted to share this with you guys. Thought it was interesting. And if you're looking for an exchange that can not only give you a bit of exposure to cryptocurrencies, but also precious metals, you guys can always take a look at Bitpanda Pro. Now, Bitpanda Pro is not only a really nice institutional level exchange for those of you who might be wanting to get exposure to cryptocurrencies in Europe, but along with that as well, they also have gold, palladium, and silver, so it gives you some exposure to the precious metals market. So I recommend you check them out. We'll have a link down below in the description. But all in all, guys, that's it for today's video. Thank you all so much for watching. If you like this video, drop a like. It's always appreciated. And also, what do you guys find about I guess, what are your findings or what is your thoughts in regards to the Compound protocol launching its Comp token? Are you excited to see more governance tokens come into the space? These tokens that allow people to have some kind of say in the future updates and functions of these protocols and the fee structures? Or do you really not see much value in it? Do you think it's just kind of speculation again? I think so far, to be completely fair, guys, a lot of it is rampant speculation, because we haven't seen, even with the Maker token, we haven't seen an extensive level of value in the sense of governance here, I think, in the long term. But I'm interested to see what people come up with. I have no doubt in the crypto space, and especially in the DeFi space more specifically, as there are probably about a dozen new things coming out each day that's so hard to keep up with. I think there's going to be a value proposition that becomes very clear here as these protocols become more functionable and more accessible to a wider range of people. All right? Anyways, I've rambled on enough, as you can probably tell, guys. Hope you have a fantastic day wherever you are, and I'll see you all in the next video. Stay tuned.